This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Hey team, we have a new sponsor here at the Crypto Conversation, BitGet, one of the world's leading copy trading cryptocurrency exchanges. Yes, indeed. What happens if you've got the funds to invest, but you don't have the time to keep track of the market? You still want to make smart money moves. What do? Well, copy trading is a popular choice for beginner traders. You can shorten your learning curve by uncovering tips and strategies from more experienced traders. BitGet's copy trading platform has over 80,000 elite traders to choose from and 380,000 followers just like yourself who are already using the BitGet copy trading platform as a potential passive income stream. All it takes is one click. You can subscribe to an elite, profitable strategist, set your limits, automate your orders, and monitor their trades. I've got some links in the show notes below. One link will take you through to the BitGet sign-up page, give you a VIP discount. So learn all about it for yourself thanks to BitGet. And now it is on with the show. My guests today are Corey Caplan and Adam Knuckey. Corey and Adam are the co-founders at Dolomite, which is a next generation money market and margin trading protocol on Arbitrum. We'll learn all about this today. Welcome, Corey, and welcome, Adam.
Thanks. Great to be here.
So let's do what we do at the beginning of the show. It'd be good to just learn a little bit about the both of you. Love to hear a little bit about your stories. I guess kind of what you've been doing personally and professionally in the lead up perhaps to meeting each other and deciding to co-found Dolomite. So maybe Corey, we'll start with you?
Yeah, absolutely. So my journey in crypto started pretty early on back in 2015. And similar to Adam, both of our entries were pretty technical by nature. At the time, I was a student at Lehigh University, getting a dual degree in computer science and business. So really at the crux of what crypto is, being very tech heavy with computer science mixed with all the economics and business side of things as well. But at the time I was building game modding software, and the company whose game I was modding actually shut me down on PayPal. So I effectively had to find another way to get paid and ended up deciding to take Bitcoin as a form of payment instead of Western Union or other options that were available at the time. So then as 2017 rolled around, like just from being involved in the industry and collecting payment in Bitcoin, Ethereum had really started to become popular, and the rise of the EVM and smart contracts. So Adam and I found ourselves working closely together on a couple of pet projects and things on the side for the Ethereum space, really in open finance, which was the precursor to DeFi. And as the later part of 2017 happened with a lot of the ICOs happening, a lot of the excitement happening around fundraising and all these new promising projects, we actually had gotten rugged on one too many exchanges to the point we wanted to fix the problem. And we were doing research into decentralized exchanges and found ourselves actually working on one of the earliest iterations of it. But going back to, I guess, more so how Adam and I met, we were on the same freshman hall at Lehigh. So we've had a very long-standing working relationship with each other, working on pet projects, school projects, hackathons, coding competitions.
My background, I started, Corey had alluded to it, but 2013 was my entrance. It was around when Bitcoin hit $1,000 for the first time. And there was this programming forum I was active on, and a few people were exploring their own crypto project. And I was able to help out in improving the miner. And it was really exciting to be able to build this thing and have my computer just running and mining. And suddenly people actually cared about buying the assets it was producing, which was just so novel, so interesting, and really got me interested in the tech of the space. But from there, personally, I was just in and out of the space periodically for the years that followed. And as Corey mentioned, we met freshman year. We both really enjoyed just building things. We worked on side projects. We worked on hackathons, coding competitions, which is why it was just so natural in 2017, beginning of 2018, to really just get in and build. We weren't really looking to start something necessarily or really get some kind of reward for it. It was just, we really liked the tech. We saw that there was a problem there, and we thought, hey, we could build something. We could try and build this better.
Awesome. Yeah. So, yeah, well, cool to hear then. So, we've got a couple of young friends from college, I guess, both interested in building things, perhaps a little bit technical minded, which is good to see. So, just before we then dive into a bit more about Dolomite, and I love the background there, Corey, about just being rugged by one too many exchanges, perhaps, and deciding to do something about it. It's always a good impetus to start something new. So you guys are building this thing on Arbitrum. I guess just for listeners who aren't aware of Arbitrum, maybe we just start there. Let's just have a kind of a high level summary of what Arbitrum is and why the decision to build there.
Sure. I mean, the decision to build there actually predates Arbitrum's existence even. So, keeping in mind that we've been building in Ethereum and the overall DeFi space since late 2017, we saw the industry grow from this small niche thing into something much larger. So throughout that our tenure in DeFi, we saw a lot of the growing pains happen in real time with slow transactions, mixed with like whenever there's a liquidity crunch or a crazy price volatility, exchanges tend to go down, gas fees tend to soar, and all these technical issues come into play that you don't want to usually deal with. And Ethereum mainnet has become the crux of these issues during these really tough times where you have, like I just said, gas fees soaring or transaction fees soaring, mixed with RPCs going down and exchanges not being able to process transactions. So it's really tough to deal with. And we wanted to build a platform that was generally available to as many users as possible and could work with the assumption that we're able to process transactions quickly. So the decision to move over to a platform like Arbitrum was really to fix some of these initial problems that we had early on with building a project back in 2017, 2018, where gas fees become extremely prohibitive for users that want to trade on a decentralized exchange, mixed with us not being able to offer the best user experience to those users because of the slower transactions and the way that we have to safeguard the system to accommodate for these slower transactions. So we're able to operate on a much more efficient and optimized playing field from working with a platform like Arbitrum. So as far as what Arbitrum really is, as far as like an end user's perspective, you could look at it like a faster version of Ethereum. And from an architectural perspective, it just sits on top of Ethereum. So really, you get to connect your wallet, use it the same way that you would as if you were on Ethereum mainnet. But the difference, one of the main differences being that your gas fees are much cheaper and the time needed to process a transaction is much faster. So two really important user experience bumps that we think will pave the way for mass or much larger adoption.
Yeah. So Arbitrum is a layer two on Ethereum. Yeah.
Yeah, absolutely. So I was trying to see if I can avoid using the technical terms for it, but yeah, as you already noted, it's considered a layer two network, or more specifically, an optimistic rollup. These are all technical terms that revolve around how Arbitrum is able to submit transactions and try to derive its security guarantees from Ethereum, which at this point has become one of the most secure computer networks in the world, second probably only to Bitcoin at this point.
Yeah, absolutely. And of course, Ethereum as the, I guess, certainly the largest smart contract based platform or blockchain ecosystem. That means that Ethereum is home, of course, as you've been talking about, to the largest and continuing to grow. Well, a little bit of a bear market, but still growing DeFi ecosystem. So, if that's a little bit of the context, then yeah, Dolomite. So tell us a little bit more about the vision, and I guess feel free to have a more of the origin story. What is Dolomite? Maybe we can start this time with you, Adam.
Yeah, sure. Dolomite, what it is, definitely stretches back to our origin in 2017 and what we were looking to build at the time. At the time, really the only DEX that existed was Ether Delta, and it would list the sketchiest assets that couldn't even get listed on the sketchiest exchanges.
Yeah.
It was challenging to use. It was, the interface was such that it was very easy to fat finger a trade and accidentally sell way lower of a way lower price than you had planned on originally. But we really liked the tech. We really, as Corey did mention, we experienced so many issues with the centralized exchanges of the time, and we knew this tech could be something else. So what we were building in 2018 was really aiming to just build a better exchange. As much as we were building a decentralized exchange, there wasn't this DeFi space that was built up. We weren't trying to enter into this broader space. It was just about building a new exchange, one that would solve the problems that existed with current exchanges at the time. And it was a very different space at the time. It was a very different time. The overall DeFi space, and this predates the term DeFi. Back then, it was open finance. It would do maybe $5 or $10 million of trade volume across all dexes on a good day, and there were not a lot of people who were even familiar with these. We had to spend a lot of time explaining what a DEX was, why you would want to use one. So that was really our goal originally. It was to use this tech to build a better exchange. And we were very happy with what we built. We found some moderate success with it. But what changed was there started to become certain established norms in the space, different tech that began to take off, things like Uniswap AMM pools as a solution for the inefficiencies of order books. And downside was original version of Dolomite was an order book based exchange. We had off chain matching, so we could still do quick trades, but all on chain settlement right from your wallet. So as the space started to move away from that, we found that Dolomite wasn't really quite the right fit for modern DeFi. But being deep users of DeFi, people who were there from the start, we were able to recognize a lot of things that we felt DeFi fell short on. And that came a lot more to the complex assets that make DeFi so exciting today, the things that are really interesting in being built, these things with these built-in reward mechanisms, staking, vesting, voting, all of these fantastic elements that make DeFi work so well, work with these different Lego layers that can be built on top of each other. The trouble was things like Aave and Compound, they were built back almost when we were building Dolomite in this V1 version of DeFi that really just had simple assets that were simple to work with and didn't ask too much of the platforms that listed them. But to build a lending platform for modern DeFi means being able to enable all of these things, these voting, these staking, vesting, these rewards, as we call them, DeFi native rights that users have by holding these assets. So that was a lot of our goal with this new iteration of Dolomite, which it went live October 13th of last year. And so really, yeah, that is what we were looking to build. I mean, I don't know if Corey, if you wanted to take it any further from there.
Yeah, I think these are excellent points to lay out for some of the most important things we wanted to solve with the current version of Dolomite. And there's some more nuance to some of the things we didn't even bring up yet with other really deep-seated issues that we try to solve in the lending space. But we can save that for later.
Well, I mean, we can just kind of just keep rolling with it because I want to talk more about I suppose broader perspectives on where DeFi is at the moment. But we might as well just get the kind of nitty gritty Dolomite stuff done and dusted. So look, by all means, Corey, please just dive right back in.
Sure. So I mean, as Adam already mentioned, this idea of DeFi native rights was one of the core things we wanted to solve. But when you actually dig deeper into the architecture we have built that enables these features, it actually all comes back to this virtual liquidity system we have built around Dolomite, which enables us to do things like pass along DeFi native rights, potentially build a decentralized exchange into the platform itself, so that we could essentially offer a generic trading, whether it's Uniswap V2 style trading or concentrated liquidity, request for quote or RFQ as it's called, limit orders, or some other mechanism that doesn't even necessarily exist yet. The platform we have built is generic to support almost any form of DEX trading. And when you think of the implications for this, it gets really awesome when you think about some of the really tough problems that lending protocols have faced over the past couple of years. Most notably, that happened recently was back in March during the USDC DPEG event. If you think back to that time, if you were a user on chain, what it was like at the time, if you had USDT deposited into Aave or other lending protocols, it was almost impossible to withdraw it. And the reason for that is because everyone wanted to borrow USDT in order to purchase more USDC and potentially speculate on it returning back to peg. It's a very classic speculative leverage log play on USDC. And what ended up happening was if you were a USDT holder, you couldn't actually withdraw your collateral from Aave because, like I said, everyone was borrowing it. On the flip side of that, you also were earning a very high interest rate because so many people were borrowing. So, you were being compensated for it, but some people didn't want to necessarily underwrite that risk, or there were opportunities elsewhere in DeFi and they wanted to pull their funds out and go elsewhere. And so, as I'm alluding to, this is a classic liquidity crunch scenario. And Dolomite's infrastructure that we have in place with this potential to build in a decentralized exchange is the solution to this problem. Because if you were a USDT holder at the time and we had a DEX stood up on top of Dolomite, you would have been able to sell your USDT into some other asset like Ethereum, wrapped Bitcoin, even USDC if you would have wanted to. And then you could have withdrawn those assets. So it's a way for these users, even during the toughest of scenarios, to withdraw their assets and be able to retain control and custody over them. And so the neat thing is it's able to support such stressful scenarios that are usually don't happen too often. But even under the other 99% of scenarios, there's some really clear benefits to working with a platform like this and potential decentralized exchange we could build into the protocol itself. Most notably is this idea of recycling liquidity in order to maximize your yield earning potential, because the current technical proof of concept we have in Bardex, which you actually can already see and play with on our site, allows users to earn yield on the swap fees, but also lending yield at the exact same time. So when you deposit assets into, for example, our ETH USDC pool, you're able to earn swap fees from people swapping against the ETH and USDC you have in the pool, but you also earn ETH and USDC lending yield from borrowers that are actively borrowing against those assets. And all these neat efficiencies that we unlock, or as we like to put it, being able to spend all four corners of your metaphorical crypto dollar, are really important advancements that allow users to feel like they're never missing a beat in DeFi, so that they don't have much reason to leave the Dolomite ecosystem. We want to take all the best things that exist in DeFi and bring it underneath one roof so that you can essentially tap into almost every possible opportunity that's out there from one easy to use interface that enables you to get access to all the tools you need to do so.
Yeah, got it. Very
And
nice.
as I
Sorry,
was going to
go.
say, it goes even further than just the, what the example he gave of being able to earn lending fees and trade fees. It applies also to those more complex assets and those DeFi native rights. For example, we list PLV GLP, this yield generating asset that has a um, staking program where you can stake the asset on Dolomite and additionally still borrow against that asset as collateral, earning the fees while you're also using it to borrow and free up capital to use elsewhere, to place it into another pool, to trade it into another asset. It's really the flexibility that will allow us to, as Corey mentioned, really get the most out of each of your assets.
Yeah, got it. Very well said. Curious then, so if you guys launched Dolomite last year or went live last year, so still really beginning, I guess, of the current bear market. What is it like at the moment? How do you view, I suppose, the DeFi market conditions? Just curious as to any metrics you track in terms of user growth, TVL, things like that. And at the same time, I suppose, is there a certain part of the DeFi market that you are particularly aiming this thing at? Like you said, you want Dolomite to be like a kind of almost like a one-stop shop to cater for any one individual team or funds total DeFi needs. That's not always realistic, but yeah, just curious how you think about these things.
Yeah, so I think just breaking down this question piece by piece, we're of course tracking TVL because it's a metric of just how much liquidity is on the platform. It's a great signaling mechanism as well to larger users that you have liquidity so that they aren't the only ones that are depositing. So if they want to withdraw, they're not worried about any liquidity crunch scenarios we just went through. And we're also tracking the amount of borrow activity on the platform, since that's really driving utilization of our interest rates and indicative of how much and how long people are actually using the product. So when it comes to, like, of course, the bear market and how we like to view things, yeah, we're mainly focused on shipping and driving as much utility through the platform as we can right now. And one of the best signals that we got recently was there was a massive correction, of course. We all experienced this recently in crypto with prices coming down, volume soaring to the downside. And between these volatility events, there was almost zero volatility where nothing was happening and interest rates on chain were really driving lower. So what we saw recently was a lot of capital flow out from other lending protocols. And so we saw most of our competitors had dropped by anywhere from 25 to 50% of their TVL over the course of the past couple of weeks. In comparison, Dolomite has lost roughly 10% of its TVL since then. And so we're doing a bit of a comparison game between us and others. And what it tells us with at least some of the profiles of the users that are on the platform using the product, they tend to be more longer term oriented and aren't necessarily using the platform for strict speculation. Because we list all these interesting interest-bearing assets, people are running hedging strategies, they're freeing up capital to potentially yield farm elsewhere. They're doing potentially even more sophisticated things than this because of the nuance of some of the assets listed. And they're not necessarily the most price conscious individuals, where a 10, 15% correction in Ethereum or Bitcoin price is going to shake them out of their positions. So these are good things that show us that we're building something that's a bit more sturdy than the other protocols that are purely allowing people to just borrow against ETH in order to leverage long for it. Those use cases tend to be very market driven. When the price is going up, they're going to do extremely well. But as soon as it comes back down, they're of course going to see a mass exodus, and that's what they're experiencing right now. So for us, it's been a good hedge on those scenarios. And like I said, we've been in the industry long enough that we know that there's certainly peaks and valleys when it comes to our industry. And so right now we're in what I would describe as more of a valley, and we'll continue to build through it and ship stuff because that's at the end of the day what we really enjoy doing. And as long as that high doesn't go away, we're going to keep shipping, keep doing our thing for when better times come ahead.
And bear markets are for builders. Although I'd say the one thing to add is that it's been a real point of pride for us that not just being able to retain the TVL through these sort of uh, either very flat markets or very down markets, but the TVL we've gained so far is done without any incentive program, which we see with a lot of other similar lending protocols. They'll have this extra token that they could use to juice their rates or provide some extra reward. But what has been what we've been really happy to see is without any of that, we've still seen growth in TVL on Dolomite. And we believe it's just because users are genuinely getting a lot of use out of what we've built. We built something that's actually helping people out and is very useful for users.
Yeah, nice. And I can see you had a seed funding round in May. Was that May this year? Led by Draper Goran Hole. But that included Coinbase Ventures and a couple of other big names. That must have been a good kickstart initially as well.
Yeah, definitely. Yeah, it was a really humbling experience to be able to raise from such noteworthy individuals, especially because we know how tough it is to come by capital in this market environment. Yeah, no one enjoys fundraising when there's big exchanges like FTX blowing up and macro doesn't look too good because capital is really tight, valuations come down, and it's ultimately really tough to convince investors that you're the right pick when they have others that they're potentially looking at. So we're really excited by the backing that we have. It's good validation from the institutional and venture aisle that they see value in what it is that we're building. But ultimately, the real value has to come from our users confirming that our product's strong and that they enjoy using it.
Yeah. And I have to ask, Dolomite. Why Dolomite? I mean, I've looked it up, and so it's like it's a carbonate mineral composed of calcium, magnesium carbonate. But it also, like when you first hear the word, it sounds like a Macintosh operating system. Why Dolomite?
Actually, I'll let Adam take this. He has a story behind it.
Yeah, it was very deliberate in nature. Although I'd say that it sounds like you already know more about the mineral than we do. Aside from that, I also think of the Dolomites in northern Italy. But the reason it was very much a practical choice mixed with sort of a gripe we had about the space. Because back in 2017, 2018, every exchange was called, it was just some combination of X, DEX, Bit, and Coin, just slammed together in a million different ways. BitX, XBit,
Yeah.
Xcoin, whatever you wanted to, any combination. And they all, it was either those or ones that you could hear the name, but it was some type of clever spelling that you would never have guessed. And so if you hear the name in person, you can never go and Google it. So we wanted to choose something that it was easy to go and Google if you had heard of it. It was easy for us to get the Twitter handle, the website, the domain name. It was something that it was an actual word in the same way, Amazon has Amazon or Apple has Apple. So we just went through the dictionary one word at a time until we found a set of words that we liked and ended up settling on Dolomite. And we've been very happy with it since. We even smaller things like the D aspect matches in with the decentralization or DEX angle and the rock solid connotation of using a mineral. So it's one we've come to really love, but was chosen for very, very practical reasons and just to go in a different direction than the rest of the space.
I like it. It makes sense. Sometimes, that branding, initial branding, and coming up with a cool, strange word, it can go either way. But it sounds like you've, got a good choice there. I like it. Adam, I was just reading there was the case study you did about what is it? Working with some of the team at Chainlink and Arbitrum, but it also mentions what are they called? Off-chain labs, is it? Yeah, off-chain labs as well. That was guy, what's his name? Ed something? That's who I'm thinking of. Chainlink labs and off-chain labs. What is the link there with Dolomite?
That one I'm actually going to toss over to Corey because he's the one who's really getting his hands dirty with it every single day. But at a high level, it's what secures our entire network. But I'll toss it over to Corey.
Yeah, so the case study in particular was more of like a recap of what it's been like working with the Off-Chain Labs team, which is the team that builds Arbitrum, as well as Chainlink, which plays also an extremely important role with how Dolomite operates today. So we already talked a bit about how Dolomite is launched on top of the Arbitrum network, a layer 2 network built on top of Ethereum, and that's the Arbitrum network essentially runs all of our smart contracts and all the logic necessary to actually operate the system. But there's more nuance to that because when you operate a lending protocol, you need a way to value the user's collateral. And this plays hand in hand with maintaining solvency for the system so that, if you want to borrow USDC or some other stable coin against Ethereum, we need to know if your Ethereum's value has dropped significantly to the point where we need to force close your position. And so that's one of the core ways that Chainlink comes into play because we are a large user of their price feeds. And Chainlink has essentially rolled out what we consider the gold standard for decentralized finance of price oracles. We think that their solution for being able to value collateral assets like Ethereum and others is the standard that every team should abide by for being able to secure your system as safely and as reliably as possible. And then beyond that, because we're part of the Chainlink Build program, which is a sort of like a technical incubator that's focused on driving new use cases for Chainlink or being able to connect their products in ways that haven't been done before. We're working closely with their team in order to roll out new technical solutions to build out new features on Dolomite that you haven't seen yet in the decentralized finance space. So, we're really excited by the work that we're doing with them. And because all the products that Chainlink has to roll out for us are on top of Arbitrum, there's this trifecta going on between our three teams where we have to work closely with one another in order to roll out these new features and things that we're going to be doing, as time progresses, and we iteratively upgrade the system in order to do cool things that we are not necessarily talking about yet.
Yeah, well, I mean, it's cool for me as well because just as a kind of like humble, non-technical crypto podcast host. I have been doing this podcast for quite a long time. And one of the first podcasts I did, was probably one of the first 10 that I did, was actually with Ed Felton from Off-Chain Labs back in 2019. And I was just looking at my notes then, and he was talking about how him and his team were building a solution that would, allow most of the activity of managing a smart contract to be done off the main blockchain. So he was obviously talking about, I don't think they even had the Arbitrum name for it then, but that's what Ed and the team at Off-Chain Labs were talking about way back in 2019. And of course, everyone knows, the kind of the story of Chainlink. So it's cool to kind of go full circle and then talk to you guys, 4 years later. And of course, Arbitrum is now live, and people like yourself are, deploying kind of cutting edge new DeFi protocols to it. And it's amazing how, you talk about builders build during the bear and the cycles continue, but it's just kind of proof that teams that were building 4 years ago and say the bears of 2018 and 2019, those products, those protocols are really kind of out in the wild now. And good to see the cycles continue, gentlemen.
Yeah, that's the real strength of DeFi, in my view, is these layers that get built one on top of another, and it's one we've really been so fortunate to be able to watch happen from the start. A lot of what we built now with Dolomite, or what a lot of teams are building, just wouldn't have been possible in 2018. But thanks to the groundwork laid by all these other teams, we can build something totally new and that can go further than anything before it. We're grateful to the work of the Arbitrum team and the Chainlink team. Corey really mentioned it, that without Chainlink, we can't run. We require secure oracles. That is the backbone of a lending protocol, to make sure that lenders are always remain solvent and can always be paid back. And likewise for Arbitrum, Dolomite would not be able to run in any reasonable way on mainnet Ethereum. We just do too much in each transaction. It would cost a fortune to be able to use Dolomite. While some other protocols are more in this race to the bottom of trying to make everything just a little bit cheaper, we're really just trying to pack in as much as we can into each transaction to enable as many capabilities as possible. And that's thanks to both of their teams, and it's why we love working with them. They're very good at what they do, and they're core to Dolomite.
All right. Well, shout out to the Chainlink team, Sergey and co, and of course to Ed and the off-chain teams as well. Just as we finish off this part of the podcast, I said I wanted to talk just about some broader perspectives on DeFi. I guess what I mean by that is, I'm sure you guys are very opinionated on this stuff, so if we can think of, I suppose, the kind of, from the technical capacity of DeFi, it is, evolving, at a reasonably fast pace, certainly compared to where we were in, as you guys have talked about, 2018, 2019. So much more is possible now. At the same time, hasn't really been an improvement in terms of the regulatory clarity, I guess, around how these open permissionless DeFi protocols are supposed to operate cross borders. We've seen the tornado cash thing was a big thing. Obviously, all sorts of noise coming out of the SEC and various other regulatory bodies and politicians in the US, and kind of the pros and cons either way of everything from Bitcoin to spot ETFs to the nature of DeFi, and just how much permissionless finance is a good or bad thing. So look, I know these are kind of big existential questions, but just interested in how you guys think about it.
Yeah, I think overall, the journey that DeFi has taken overall, in the cryptocurrency industry, is very analogous to the early internet. And being in the industry as long as we have, we hear that analogy get thrown around quite a bit, but definitely does seem applicable when you think about the early start to the internet. One of the first use cases for it was pornography, and being able to free flow of information and sharing information around that otherwise wouldn't necessarily be popular on via newspaper or via advertisements on there, because of how content was regulated through it. I mean, you think of the transformation that the internet took over time from being something that was very niche or being used for something that was more of a taboo thing to eventually this idea of making a Facebook profile and putting all your information onto a profile on there. Initially people scoffed at the idea of why would I want to publish all my information on there publicly for people to see? And eventually, things like Airbnb came along as well. Like, why would I want to rent my house out to strangers? All these ideas at first are met with some degree of resistance, whether it's fear of the unknown or people that are fear mongering and focusing on what the downside of whatever the idea might be. And people fail to see the other side of the argument of how it could be useful. I think ultimately because of the technical aspects of decentralized finance and crypto as a whole, it's in a tough spot because it's very technical by nature. It's tough for these politicians that are not technically minded people to understand how crypto works. And crypto is in a very weird spot because it can be very consumer facing, but there's also, as we know, really deep technical ties to it that go really far down the rabbit hole where you have some of the most brilliant people on the planet working on it and doing things that even seasoned DeFi veterans like Adam and I wouldn't necessarily know what the heck they're talking about at first glance. And when you consider the breadth and depth of information that flows in our industry, it's no question that we're going to see regulation come in wrong sometimes. We're going to see opinions that are quite jarring once you actually understand how the industry works, because they don't necessarily know how this stuff works. So there's an education problem that needs to be overcome, which it takes time. It's going to require probably some degree of lobbying and being able to shift narratives around where things have been previously quite negative. We'll have to start to flip them around to be positive and start to shine a light on more of the good things that this industry does well and how it can be used to actually fix problems instead of cause them.
Yeah, very well said, Corey. Thank you. Adam, anything to add?
Yeah, I think the only thing I'd add on there is from a different angle. I think that while the regulatory landscape, the biggest problem is that there aren't always, and there often aren't, these firm regulations to follow. If you know where the bounds are, you know not to cross over them. But when they're not well defined, it's a lot harder to know what you can and you can't do. And I think addressing that from a project perspective really comes down to working with legal experts that know the space, know the technology, and are experienced in it. And that's something we've tried to do. We've been working for years with a very experienced lawyer in the space who has a background in computer science, who is as up to date as you can be on all of this. And I think that's a problem that a lot of projects come into, in that they are very tech first. They just go and build, and everything else is this afterthought. The idea is just, if we get big, then we'll deal with the legal stuff afterwards. But I think it needs to be done in this very bottom up, one step at a time approach, to be able to do it as securely, as safely, and as properly as possible, both for the sake of users and for the sake of regulators. But it's definitely a challenge that can be hard to overcome, but you just got to make the best efforts you can.
Couldn't agree more. All right. Thank you for that. Let's go to a very quick break and then we'll come back. We'll finish off. We'll have some fun. We'll run you both through the very famous crypto conversation hot take round. Just super quick before we do that, just for anyone listening who wants to try Dolomite out, what should they do?
Well, I'd say they could go head over just to our website. It's a great place to start, dolomite.io. They could dive into the app from there. But I think the best way to really get to try out some of Dolomite's features is that we have this XP program we built. It's a lot like experience points in a video game. You complete a campaign, you get experience points, and those give you levels. And there are opportunities to do it by using a bunch of different assets that Dolomite lists, different features of Dolomite. We're always adding new ones. And so just building up some experience points, getting some levels will give you a nice broad overview of what's possible on Dolomite. And then you could take that over into our community Discord. It's linked from our website as well as our Twitter account. And on there, you'll get a nice little icon. You'll get your level represented there, getting access to exclusive groups, and you could join the conversation. And we love to get feedback from people.
Awesome. Sounds fun. Gamification of DeFi. I like it. All right. Let's go to that break, and then we'll be back to put Adam and Corey through the very famous crypto conversation. I'll take round back in 1 second.
Look, we'd all like to say we're pro traders, but the reality is we're probably not. But with BitGet, you don't have to be. Why? Because BitGet is the world's largest copy trading exchange. Instead of you muddling through it on your own, feel confident. BitGet allows you to automatically copy trade from over 80,000 elite traders with 24/7 support on our secure copy trading platform. Start following expert traders on bitget.com. Check for details in the show notes and join BitGet today.
Okay, we are back, and I'm with Corey Caplan and Adam Knuckey. They are the co-founders of Dolomite, next generation money market, margin trading protocol, all things DeFi on Arbitrum, on Ethereum, of course. Adam and Corey, I like to finish each podcast with a quick round of rapid fire crypto conversation hot takes. Are you guys up for it?
Yeah, let's go for it.
All right. So since we've got two of you, I'll just direct the questions in turn, essentially. Just want kind of quick, rapid fire, hot take style answers. No right or wrong way to do it. Let's start with you, Corey. I guess we know what you say, but where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
Probably somewhere in the middle. I'm a big fan of the Ethereum landscape and the modular vision that it has for it. Not necessarily most bullish on other blockchain networks that try to essentially recreate Ethereum or do something that Ethereum does, only slightly better.
Very considered answer. I like it. All right, Adam, let's go to you. What would you say is your firmest conviction crypto opinion?
Ooh, firmest conviction. I guess really, if I said firmest, it would be that DEXs are better than centralized exchanges. Everything else can be shaken by new changes in technology, but I cannot see any future where I'm going to be willingly going back to a centralized exchange. And I think it's one of the strongest use cases for DeFi.
I like it. Okay. Corey, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. With that in mind, DeFi, what does it look like in 10 years' time?
I think DeFi will be heavily integrated into the larger financial system, and maybe not necessarily the most obvious ways, the most ways where people are interacting with it directly. It could be done completely behind the scenes as more of a settlement layer for banks and back offices, hedge funds, etc., to interact with.
Yep. Nice. Makes sense. All right. Adam, you'll be familiar with this quote by William Gibson, who said that the future is already here. It's just not evenly distributed. Can you think of an example of the future being here right now, but most people aren't aware of it?
I think in general, at least if we're keeping it to DeFi, it's a lot of just the existence of these DeFi primitives, things like stable coins or being able to earn yield on them, being available worldwide. Someone in a second or third world country with unstable banking can, with just a phone and nothing else, can hold US currency and earn interest on it. And to me, that is incredibly futuristic, and I don't think it's as widely known as it should be.
Couldn't agree more. All right, time to finish this off, gentlemen. So we'll put this to both of you. Corey, you can go first. What is your favorite science fiction book, film, or TV show?
Probably Big Bang Theory. I think it's a fun show with really well done cast.
All right, Adam.
Ooh, I really love science fiction as a genre. Although I don't know if it crosses the line into science fiction, but you mentioned William Gibson, and I don't know if you know the 1995 movie Hackers, but yes. Named after Gibson is the computer they have to hack, and that one, it definitely crosses the line to fiction at times, but that one was actually pivotal in me going into software development. It really, really connected with me as like a young teenager, and it's why I went off and learned programming on my own in high school. So I don't know if it's fully science fiction, but it is absolutely my favorite.
Yeah, no, well, that's a great answer, and we'll absolutely take that. I think, hackers. So from 1995, I think, I mean, I don't think I've seen it since probably the 90s, and I'm sure if you watched it now, it would be a little bit dated, perhaps a little bit cheesy, but that is simply because it was one of the first depictions of kind of early hacker culture on the big screen. So yeah, I like it. Very great answer. Starred Angelina Jolie and Johnny Lee Miller, actually. So yeah, that's cool. All right. Anyway, side notes. Let's finish it off.
As I said, that's Angelina Jolie's. I think it was like her first major role, which kind of crazy. But I'd say it also got a lot of things right. They definitely consulted with someone when it came to social engineering and phone phreaking. And for all the ridiculous aspects of it, I love the energy of it, and the soundtrack cannot be beat.
I like it. And Rotten Tomatoes, which can't be trusted because they say it gets 31%, which that sounds way too low. All right. Someone needs to hack that. Anyway, let's finish it off. Adam and Corey, just finish off the podcast by again telling people what they should do to learn more about the Dolomite protocol, how to engage with it. And look, if you guys are on Twitter, please do shout out your Twitter profiles.
Yeah, absolutely.
Yeah, definitely hop up. Oh, sorry, go ahead, Corey. Do take it.
My bad. My Twitter profile is at Corey Caplan 3. You can find us very easily by just going to Dolomite's Twitter handle and our website. Once again, our website is dolomite.io. Our Twitter handle is dolomite_io. And all the links to relevant socials, community-oriented things can be found from our website anyway. Links to our application. From there, you can join our Discord community. You can chat with Adam and I directly on there, as well as follow updates via Twitter announcements, and otherwise join conversation with us on Twitter as well.
Awesome. Thank you so much for coming on the show, Adam and Corey. All the best, and bye for now.
Yeah, thanks for having us.
All right. There you go. That was Adam and Corey from Dolomite. Great talking to those guys. Very smart young men. Thank you for coming on the show. And yeah, thank you. I'm not sure who it was Adam that brought up hackers? Yeah, just looking at it again on Rotten Tomatoes now. So hackers from 1995. Yes, indeed. I think first major film role for Angelina Jolie. The synopsis of the film: a teenage hacker finds himself framed for the theft of millions of dollars from a major corporation. Master hacker Dwayne Murphy, aka Zero Call, aka Crash Override, has been banned from touching a keyboard for 7 years after crashing 1,500 Wall Street computers at the age of 11. And now keen to get back in front of the monitor, he finds himself in more trouble than ever. Amazing stuff. Amazing stuff. Yeah. All right. There you go. Thank you, team, for listening to the end of another show. Please make sure you are subscribed to the Crypto Conversation and whatever podcast app you are using. But that is it for today. This was the Crypto Conversation for Brave New Coin.